the exit number of quarter 4 was quite impressive at around 600 rupees per ton. Where do you see this number headed?
In terms of good morning, thank you for having me on the show. In terms of volume, we expect to grow by more than 15% in the next this financial year. And in terms of margins, we expect our EBITDA per ton to be around 850 rupees.
Okay, 850 rupees. So that's a big improvement from what you've seen. Mr. Saraogi, let's get a couple of more numbers because Mukutban, that's the problematic issue, right? It's going to be adding capacity, but gradually you have been turning it around. And as you said, in March, it turned positive. So out of this 15% growth that you're talking about, which will be closer to around what? Around 17 million tons odd, or more than that, actually closer to around 17.5 million tons. How much will come in from Mukutban? And also, if you could tell us, what is the EBITDA per ton number you're factoring in from here?
We are expecting volumes from Mukutban to be around 2 million tons.
Oh, okay.
And EBITDA per ton, since we are going to start getting the incentive only from the middle of second half of this year, but still our EBITDA per ton will be around 500 rupees. That's what we expect. Yeah. And the full impact of incentive, which itself is around 600 rupees, will be seen next year.
Okay. All right. Is there any risk to this incentive number, sir? This 600 rupees incentives from the second half of the year. I know when you all put up this capacity, all was agreed. It's all been signed on the dotted line. But no risk, right, to this number?
No. There is no risk as such. It's just that currently we are using the input tax credit which is available to us on account of capex. So once we exhaust that, we will start getting this incentive.
Mr. Saraogi, if I heard you correctly, for the year as a whole, your guidance is 15% volume growth and the EBITDA per ton improving from 478 to 850 per
That's
ton.
Right.
Okay, so
See,
give us some idea.
Understand, you must understand this year we were let down by the losses at Mukutban. So just to give you a sense, when we started the operation, our variable cost of cement at Mukutban was in excess of 4,500 rupees. And at the time of exit, it was less than 2,800 rupees. So because of the adverse cost structure, we were the more we were selling, the more we were making losses. Now that we have become EBITDA positive, now that we have started earning contribution, so that is really a turnaround we are having in those operations. So
that efficiency, that efficiency is going to play a big part in that EBITDA jump that you're talking about. I also wanted a word on pricing. If you could tell us what trends have been like so far in the first quarter, because we've got a lot of unseasonal rainfall in different parts of the country as well. So I'm not sure how that's impacting demand. But if you could give us some idea about price hikes in Q4, in Q1 and the outlook.
Yeah. No, price hikes, actually, you have to see in the backdrop of the cost structure with the fuel price coming down drastically, the cost structure of cement player has also been coming down. Now, in that backdrop, this demand has been stable, I would say, and prices are also by and large flat, or there may be some marginal drop in certain regions. So that
marginal drop in, marginal drop in Q4, or have you seen that drop in Q1 as well?
Q1 marginal drops in Q1. Largely flattish is what I would say at this point.
Okay. All right. A couple of more details, Mr. Saraogi. Your debt number, well, that's holding at around 3,600 crores odd. By the end of this year, what is the number likely to look like, and what kind of capex have you lined up for this year?
In terms of debt, I would say we should close at less than 4,000 crores. So in absolute terms, you may not see it going down, but what is definitely going to change is the debt EBITDA. That we expect to come down to below 3, which is the policy that we follow, that on a sustainable basis, it should be below 3. So we expect to achieve that in this financial year.
Okay.
In terms of capex, in terms of capex, we are expecting to do about 500 crores on account of sustenance capex. Okay. And we have a couple of coal blocks under development, which are going to give us significant savings once they become operational. Okay. So on that account, we are expecting to spend about 300 crores. And in Mukutban plant, there's some 200 crores which we will be spending this year.
All right. So 500 crores is the total capex, and the debt number will stay flattish for this year.
Yeah, capex, including all projects, will be 1,000 crores. I mean, 500 is sustenance, 300 coal block, and 200 Mukutban.
Got it. All right. Final question then, Mr. Saraogi. You know, there is some talk that maybe one of those assets on the west coast, that is Sanghi Industries, is on the block. Have you heard of it? And any possibility that Birla Corp could be interested?
I've definitely heard of it from the news reports. But in that Sanghi asset, I don't think we have got any interest.
You all don't have any interest as of now?
In the west coast, yeah.
Okay.
Okay. All right, Mr. Saraogi, we will leave it on that note. Thanks very much for joining in and giving us all of the details on your business. That's Birla Corp.